think the single most important thing is that we do backstop the industry, and that is paramount. And we'll do what it takes to do that. But yeah, ideally, other people would be joining in that with us.
That was FTX founder and former CEO Sam Bankman-Fried's response back in July on Yahoo Finance to the criticism that his exchange was getting too big. And this is the saga develops. We've been hearing about the impact to other players in the industry. For more, let's get to our very own crypto reporter, David Hollerith. Dave.
Brian, so we can sort of think of FTX's whirlwind collapse as having sort of two kind of effects on the crypto market. The first is, given its bankruptcy, there's 130 affiliated companies, and most of those look like shell companies. We're not really, it's not really clear what they could be holding at this point. But as far as direct exposure, we have the venture investors that have had an equity stake in FTX, and that included Temasek, Sequoia Capital, the Ontario Teachers Pension Fund, and then crypto-specific VC firms such as Paradigm, Multicoin, and others. So while perhaps these entities have probably taken the largest amount of losses in terms of their investment into FTX, outside of the crypto-specific firms, there's still a pretty low exposure in terms of the losses they're going to see relative to their other investments. And then we have the firms that specifically traded on FTX and held their cryptocurrencies on the platform. As far as that goes, we have Genesis Trading, CoinShares, Galaxy Digital, Wintermute, which was a market maker, Crypto.com, another company called Matrixport, and the hedge fund Galloy Capital. And those funds are going to be stuck on the platform, and they range anywhere from a couple $10 million to $100 million. So it's not enormous for these companies, but again, they're smaller. And also, I want to point out, just given the bankruptcy process that it's expected to carry on for, potentially years, it might be a point where a lot of these firms may want to sell the claims on their assets early so they can get out of the bankruptcy, sort of free up the capital they could get maybe from a discounted claim. And then, there are some smaller tokens such as Serum, which for the Serum project, which was revealed as being heavily owned on FTX's balance sheet. And so that sort of comes back to the fact that a lot of people are seeing these smaller tokens that FTX and Alameda held onto, and essentially the amount of selling they're going to have to do is going to rock the token price and make it untenable. These are tokens that are, their market cap is only a couple $100 million. But then, if we move on, there's Voyager Digital and BlockFi. Voyager is in bankruptcy right now, but FTX was going to purchase their customer assets for $1.4 billion. It can be assumed that that deal is off the table. Voyager Digital has already announced that it is sort of reopening bids for selling its customer assets, and that is still sort of developing since over the weekend. Then we have BlockFi, the crypto lender which FTX lent money to over the summer. BlockFi paused withdrawals on Thursday, and since then they've sort of remained silent. They've not been open for comment, but they're not appearing on the FTX bankruptcy, but it can be expected that they're facing issues, and we'll be hearing something from them very soon, if not sometime today. And then the second point goes more to this issue of trust that crypto exchanges, I want to point this out, centralized crypto exchanges specifically, companies that are managing customer funds, crypto assets, they're sort of dealing with this broader issue of a blow to trust from customers. And a movement that we've seen since Friday has been for companies to publish their assets, or at least customer assets, on the blockchain as sort of a way to prove their transparency. So I wanted to point out too that Crypto.com, in doing this, has seen its own sort of shortfall. After they published their wallet address, it was revealed that in October they made sort of a mistaken transaction, about $405 million back in October, to another crypto exchange. Crypto.com's own crypto exchange token has actually seen, about a 24% decline since that has sort of come out on Saturday. And in sort of an emergency AMA, the company's CEO talked to investors and customers this morning. And here's a little bit of what he had to say. And it sort of echoes what's going on with centralized crypto exchanges right now.
If you look at the nature of the business, it's really very simple. Give access, charge a fee. We never engaged as a company in any irresponsible lending practices. We never took any third-party risks. We do not run a hedge fund. We do not trade customers' assets. We always kept one-to-one reserves, and it's also true today, and very soon we'll prove it with the audited one-to-one proof of reserves